Thank you so much for joining. If it's your first time here, welcome. My name is Lindsay Lehr. I'm the Managing Director of PCMI, or Payments and Commerce Market Intelligence. We're thrilled to have you. We hold these meetings twice a month as an effort to stay in touch as an industry, to present some mutual learnings, bring you the newest trends, so that you're always up to date and that we can also learn from your perspective and your questions. It's also very valuable for us as well. So thrilled that you're here. And today, we're going to be presenting, along with Andreas Farge on our team here at PCMI, a new piece of research which we come out with about this time every year, really focusing on e-commerce. So normally we have almost every coffee chat, we have an external speaker to share their expertise with us. Today we do not. We're going to be kind of presenting our own study and our own research here. We have quite a bit of content, but as always, I really welcome questions and comments. We can jump around the deck as you guys like, and making sure to have a really enjoyable conversation today. So welcome. Let's move ahead. Just a few announcements, a few guidelines, and then we'll jump right in. So again, if this is your first time, this is not a typical webinar. This is a meeting, meaning that you guys are free to have your cameras on, to open up your mic, to put your comments in the chat. You can wave your hand, you can raise your hand virtually. I count on my usual suspects to get the conversation going, but you guys really make these sessions. And so I really encourage open participation, questions, and feel free to share from your own perspective. You know, if you have an anecdote or something you'd like to share to enrich the conversation, please feel free. Let's go ahead. As a reminder, you all have access to our PCMI Intelligence portal, which is where all of our coffee chat content lives alongside all of our other thought leadership, historically created since 2018. It's an online portal. You create a username, log in, and you have free reign and can search all of our content as well as download it. And it's just an easy way for you to access all of our thinking and content and data easily at your fingertips. So please go ahead. You have the QR code there to sign up and make sure you do that. And that's your best window and portal into all of the content that we make available to you. Okay, let's go ahead. I'm happy to, many of you know Andreas on the PCMI team. Welcome, Andreas. He was very much responsible for the research and the writing of this report, and will be helping present it today. Welcome, Andreas.
Thank you, Lindsay.
All right, so let's jump into it. We're going to be covering e-commerce today, okay? And this is a topic that's near and dear to my heart, because studying e-commerce in Latin America really helped us launch the payments practice back in 2017, 2016. We've been studying this topic for years now. And e-commerce is really what helped catalyze digitization across Latin America in many respects. So we've been looking at this topic and updating it every year since around 2017. And because we've looked at it so intently and so deeply, we really have the best data set, the best, most accurate, most detailed, most comprehensive, and most comparing apples to apples across 15 markets in the region that exists out there. And we've done this in Latin America until now. We've looked at other global markets, around 20 global markets we've looked at, and we're actually officially expanding this data set beyond Latin America this year. And so later in the year, we'll have additional markets and we'll start building more of a global data set. But today, most of you guys are Latin America focused, so this will be highly relevant to you. Let's go ahead. We can jump right into our methodology and just some definitions. So what's important for you guys we're going to look at market size, we're going to look at growth. And what's important for you to understand when we're looking at the PCMI E-Commerce Data Library is what we call it. Our approach to e-commerce market sizing is different than most other reports you will see out there. There's a lot of public information on e-commerce, but they're mostly restricted to one country. You've got inconsistent methodologies across markets. You've got incomplete coverage of the full e-commerce industry. And a lot of it is based on already existing information or surveys, which are really not useful for looking at an entire market size and looking at trends. So we've done one singular methodology across 15 markets. If we go to the next slide, the way we approach this is first collecting and compiling all publicly available information available about a market, from official transactional data from central banks and e-commerce associations, to surveys, to World Bank data. We also conduct over 50 interviews with the gatekeepers of e-commerce, the issuers, the acquirers, the large merchants, the PSPs. We triangulate all that data to come up with quite a detailed data set that, again, I think is the most detailed and comprehensive around that's available on the market. And how do we define e-commerce? This is important. Our data is larger than most other data you'll see from eMarketer, from Euromonitor, for example, even from local reports like Web Shoppers in Brazil. And that is because when we're looking at e-commerce, we look at the entire universe of online transactions, which includes not only retail, but travel, digital goods, other services like tax payments that you might not think about being referring to e-commerce. It includes both domestic and cross-border purchases, and it covers all payment methods, including, of course, cards, wallets, bank transfers, and several different types of cash payments. So it really is all inclusive, and we have all of the breakdowns that you need to understand what's really going on in these markets. Okay. All right, so let's get into what our results are this year. If we go ahead, we're going to start off just looking at the state of e-commerce in the region. And here we kind of see the history of our research of this region. What's exciting about 2023 is that we will, by the end of the year, exceed $500 billion in e-commerce this year, which is kind of an exciting milestone. And what's just important to see is that when we look at the growth of the region, pandemic boom really occurred in 2021 and 2022. In 2020, even though e-commerce share of total expenditure really surged, overall consumption, right, contracted because people were losing their jobs. And so e-commerce growth kind of remained stable. And then because of these massive digitization habit migration, we really saw e-commerce growth hit historic highs in 2021 and 22. This year, we're starting to see some stabilization. And if you talk to merchants, they'll say, look, we really think this boom is over. We're still growing at very attractive numbers, but that things have become a little bit more stabilized, especially in large markets like Brazil. But going forward, we're still seeing growth in excess of 20% annually. And kind of four key growth drivers that we're seeing. Alternative payment methods, which we're going to talk about extensively, improving technology with respect to UX, which is very much driven by mobile wallets, innovations coming from marketplaces and platforms that are selling all kinds of different products, and increasing investment in cross-border vertical, which is growing faster than domestic e-commerce in almost every market. Okay, moving ahead. So e-commerce, right? I mentioned that it's comprehensive across industry. And this is how it breaks down by key segments of the industry. Retail representing just under half of the total market volume. Okay, and retail, as other verticals have become more mature, retail share has ticked downward over the years, but is still, of course, the bulk of expenditure. We have sized here travel, ride-hailing, and delivery apps, streaming, and gaming all separately. And then this other category, which we will, as we develop this, we will work on, separating this out more. Other is quite a large category that most people don't consider or think of when they're talking about e-commerce. This includes SaaS, which is a rapidly growing industry, tax payments, government fees and licenses, mobile top-ups, telehealth, insurance, gambling, and other miscellaneous services that you might pay for online. So that's why it's quite a large segment. Okay. And when we look at growth, we have this other category is really driving growth in many ways because it's covering very quickly digitizing and quickly growing verticals, gambling being one, SaaS being another, and even kind of government verticals, which you think of being as very traditional, are quickly moving into the online channel. So we have a lot of growth in these non-traditional verticals, which is where a lot of PSPs are starting to specialize, specifically because they see these opportunities. Retail, of course, has become extremely competitive. Second to that, retail is the second fastest growing platform because of its great diversity, and you have both very large retailers, you have very large marketplaces, and then of course SMBs, which are most often going to be focused in the retail channel. Okay, so how does Latin America stack up against the rest of the world? Now, this slide I want to present with a huge caveat and disclaimer of that being that PCMI has not fully conducted and vetted the same analysis in other world regions. This data on Asia, US, Europe, and Africa is taken from Statista. I do not like Statista as a source in general, but the good thing Statista has is that it does have global coverage with consistent methodologies and definitions. And so we can use that as a benchmark, right? I would not use this. I would not put this in a client deliverable. I would not use this to make any strategic decisions, but it does provide us with some relativity to understand where Latin America sits on the global stage. And the numbers make sense. All right. So here we're only looking at retail e-commerce. Okay. Again, most e-commerce sources are only going to look at the retail vertical. So we can kind of see market size, right? You've got Asia, almost, $2 trillion, with the US approaching $1 trillion this year. Latin America sits at 272. Of course, we have population to consider. So when we look at annual e-commerce spend per capita, this kind of corrects for population, and we can understand how penetrated e-commerce is among a population's monthly or daily expenditure. So overall, on average, Latin Americans are spending up almost $500 on online retail per year. When we compare that to Asia, in many ways, most of Asia is still considered developing. And is similar in GDP per capita as Latin America. So we can kind of use this Asia number as a comparison as how much room to grow does Latin America still have. And so we see quite significant room for growth still. We compare this to the US, a developed, highly digitized market. We see how large that spend is per capita. And then we look at Africa, which of course is deeply underpenetrated and in many respects doesn't yet have the infrastructure to support rapid growth, which is why we see Latin America as the fastest growing e-commerce region. Again, I take this as the grain of salt because we haven't personally vetted these growth numbers, and Latin America is quite a bit higher. I don't know if the gap is that large in actuality, but I am confident in saying that Latin America is the fastest growing region thanks to widespread digital penetration. The infrastructure is there. And we haven't reached levels of development yet across the region that are kind of at par with Asia.
I'd just like to Lindsay, I'm looking at this and I'm frustrated with it as well, and in large part because I'd want to see China separated out from Asia. Mm-hmm. With Alipay and WeChat Pay, is how is that messing with these numbers?
100%.
It's yeah, it's frustrating.
It is a little disingenuous to put Asia all as one. And actually, there is more granular data available. There is regions separated out. So in another iteration of that, we could look at that.
Asia has the two biggest countries in the world in it.
Correct.
With China and India in the world. And let's all bundle them together with highly developed. You've got Japan. Seriously?
You've got Japan and Singapore compared to Indonesia. And with only 2% credit card penetration. It's a hugely diverse region. So I agree, it's really tough to bucket that in. And so this deserves a little bit more granularity. Awesome. Okay, let's continue. Okay, so with all that being said, a couple of just basic slides to just show where we are in terms of digital penetration, okay? That we have reached essentially universal access to the internet. Now, we at 85% penetration. There are still rural regions that don't even have telecom service or road access. So it will be very difficult to get to 100% or 95%. But for all intents and purposes, 85% is a pretty high number. Now we still have 33 million new consumers using the internet for the first time. In the next few years, this is generational as well. But I would consider Latin America to really be fully accessing the internet. Now you can improve the quality of that access, certainly, but we have the table stakes in place for e-commerce access. Same thing if we go to the next slide with financial account penetration and this is directly related to e-commerce penetration. So here we have at this point 71% of the region has an access to some financial account, whether that be a bank account or a fintech account or a digital wallet. And so there is still room to grow here, certainly, but that is a number that really provides critical mass for digital payments and access to e-commerce. We see 66%. This is based on local survey data and financial inclusion reports. 66% of adults have shopped online at least once in the past year. Now that may mean ordered delivery through a delivery app, or that may mean did a mobile top up. It doesn't necessarily mean going online and buying a piece of furniture or a television. It could be a streaming service, right? But they have made at least one digital online transaction in the past year. And so we kind of see different groups of countries starting to emerge. We see, these top 4 countries, which are increasingly, kind of have decently high per capita spend in e-commerce, considering all of e-commerce. And here, the industry is starting to get more competitive, especially in Brazil. And so value-added services and multi-rail payment options are becoming critical to grow in these markets. Ecuador or other, Andean, some Central American countries, access really still is an issue here in some of these emergent markets. And then Mexico and Peru are, penetrated markets, but still very heavily cash-based. And that cash conversion is really what's going to be driving growth. So we start to be able to separate out this panorama and see different clusters of markets.
I have a question. I sort of understand why Mexico is fairly low, but I don't know much about Peru, to be honest. So I was wondering if there are reasons why Peru is dropping behind or not keeping up with everyone else.
Great question. I don't know if we have any Peruvians on the call who would like to take a stab at that. So Peru is a more traditional market in some respects, lower GDP per capita. Of the top 6 markets, it's always kind of the lowest in wealth and digital indicators. So just wealth and economic development is the primary barrier, I would say, compared to the rest of the region. And for that reason, it has not attracted the same level of investment in fintech as some of the other markets. It's really been the banks who have been instrumental in playing a role in digitization, primarily Banco de Crédito de Peru, who has the #1 neobank or P2P app, Yape, in Peru, and they've really done a fantastic job in converting digital payments from kind of wealthy credit card holders to more of a mass product. But that has taken time. Again, also card interoperability came late.
Do you know if that 54%?
Mm-hmm.
So do you know if that 54% is like a stalled number, or is that catching up quickly? Because it could just be they're a year or 2 behind.
It's catching up. It's catching up.
Okay, good.
Especially during the pandemic, we saw that number really go up from around 30%. Really thanks to Yape, to Plin, and these other kind of P2P wallets.
Okay.
Any other opinions out there on Peru?
That's my lack of knowledge of the...
Yeah, sure, of course.
Anyway.
That's one of the good reasons for having this call, Nick.
Exactly.
No, Lindsay, but I was looking at the number, for instance, for Argentina, and maybe Chile and Colombia could happen the same. On the 99% of financial accounts users that you are saying there, I'm not so sure about that number, or maybe they have that number, but they are still economies based on cash in most of the cases. Probably they have a financial account, but they take the money and they transact in cash in many cases. No, especially
Yes.
retirement people who get some subsidies and then use the money, but take the money, but not using the financial account as we are expecting. No.
Absolutely. And these numbers, of course, you have to be critical, right? These are financial account users might be the wrong term. It's people who have officially have access, have an account owners. So in Argentina, everyone is issued a free bank account or a free prepaid card / account based on a government program. And so the government can very easily say, yes, we have 99% coverage of financial services, but that says nothing about actual usage. So the point here being, in many ways, barriers to access have been removed, but that says nothing about usage and how deeply cash is still used.
Correct.
100%.
Statement. Yep.
Okay, great. Let's continue. Okay, so again, mapping these markets, what we've done here is mapped how these markets stack up in terms of penetration. So along the x-axis here, we have e-commerce as a percent of GDP. So how big is e-commerce for this market? And of course, Brazil, Colombia is actually quite surprising, Chile, and even Peru, right? And this shows us how important alternative and cash-based payment methods can be in some markets. Whereas Mexico is still quite low, only 4%. So some of these numbers are kind of surprising and give us insight into how this industry operates. So we have penetration over GDP along the x-axis, and on the y-axis is percent of users. How deeply is e-commerce spread out across the population? So Bolivia, right, only around 25% of adults have ever shopped online. So this is a market that is still deeply underpenetrated. Paraguay, Guatemala, similar. Brazil, Chile, these are more highly penetrated. You've got a population that almost everyone has bought online recently. And so wherever these countries are on this map is going to help determine a little bit, we lost our slides, is going to help determine what are the major growth drivers and how we want to consider approaching these markets. I think we might have lost Andreas. Give me a moment, everyone. Oh, there we go.
Oh,
Okay.
he's back. That's
great.
That's a relief.
Cool. So I like this slide. It just kind of helps us differentiate and think about these markets in different ways. And this is another way of showing the same information. So we have market size compared with market growth. And here we can kind of see the logic, right? Brazil, massive market, by far dwarfing the rest of the region, but is the slowest growing. Okay, and that makes sense. It's a huge market, the most competitive market, has been growing aggressively at over 20% for the last decade, and is starting, 17% is still pretty good, but is starting to stabilize. Okay, compared to the rest of the region, where Mexico, one of the most underpenetrated regions compared to its population, its level of GDP development, and even development of payment methods is growing 33%. Also Peru, we have the highest growth rate here in Peru. Paraguay is also one of the top ones. Colombia is one of the top ones. And all the other ones are kind of centered or stabilized around 20%. So going forward, again, I guess these projections change, and we do update this information towards the end of the year. If you can just go back one. We have, continued growth over the next few years of 22%. And in 2023, we expect 27% growth across the entire region. Okay. I'm having some difficulty with the slides.
There we go.
Okay. So now getting into this volume and how it's breaking down in the mobile channel has exceeded 50%, since 2020, since the pandemic took place. And we really see the mobile channel continuing to dominate, even representing almost 75% of total volume as we go forward. Desktop purchases are really reserved for expensive high ticket items, especially when you're doing a lot of product comparison, travel, when you just kind of want to have the spaciousness to look at really what you're buying. And as technology improves, mobile continues to take over, and especially as e-commerce continues to grow among lower income segments where smartphone or tablet might be their only device. So this just tells us how increasingly seamless and frictionless and easy payment methods and the whole checkout process needs to be to be appropriate for the mobile channel. Okay, let's go on. Okay, so our next section is really focused on payment methods, and we're calling it multi-rail convenience, because the truth is we are really settling into an environment of competitive competition among payment methods. In 2018, credit cards represented 55% of e-commerce, and that has steadily ticked downward. Okay, today representing 48%. So they're losing share. They're still the leaders, but credit cards are losing share in favor of alternative payment methods. And what is remarkable is that Pix in Brazil, right, central bank's real-time payment scheme, has become the #2 payment method in the entire region. So Brazil is so dominant. And Pix has been so successful, it has dwarfed even debit cards across Latin America. So that gives you a little bit of idea of the scale that Pix has accomplished. Debit cards and digital wallets and cash those three payment methods essentially equate to account access or cash access, liquidity access. And so those three payment methods are kind of duking it out for the number three spot. Other bank transfers, buy now, pay later, still small, but growing quite quickly, of course. And then other, which is just a miscellaneous bag of payment methods that are offered here and there around the region. Okay, we go ahead. So looking into Pix, I think you guys maybe have seen this slide in other presentations. We have updated it, though, to reflect the official data from ABEX, the card association in Brazil, which comes out with each quarter data update on card volume. And Pix, this is not only e-commerce, this is on and offline, okay? But what's important to see here is that Pix, which is this green line, Pix P2B, or person to business, purchases with Pix officially exceeded debit card volumes in Q1 of 2023. And of course, we're going to be tracking this every quarter, but this is a very important milestone. You'll see that Pix continued to increase while debit card and credit card volume fell in Q1. So this just gives a little bit of more context to Pix and card volumes overall. And then, of course, in e-commerce is where Pix has excelled even more so than in the physical channel. So if we go ahead, let's take a look a little bit more at this payment method breakdown of Brazil in particular. So Brazil actually has the greatest, you'll see this trend of cards declining most pronounced, from 67% now down to a projected 45% going forward. And this red, which is Pix, really, just blowing up. This red is Pix and bank transfers. Pix launched in 2022, and prior to that, bank transfers was just a very small share. And wallets have also gone down a little bit because now Pix is available and I don't necessarily need a wallet. I can just use Pix, but wallets are still representing a decent share here.
Hey, this is Michael. I've got a question. With the introduction of Pix Automatico, I think later this year, early next, I suspect we're going to see another jump in growth in Pix. And where will we see the impact in other card methods? Are we going to see the share of credit cards go down, the share of I think like Mercado Pago can do some recurring as well as some others, but
Great question. There's a lot of innovations in Pix that will continue to boost it. Recurring payments probably being the number one. Credit with Pix being also extremely impactful. So the central bank there's not quite clarity on when the recurring Pix will be available. Different companies are kind of figuring out how they can do it themselves. Same with credit. But if and when Pix does enable recurring, that's going to hit credit cards mostly, I would say. Debit cards as well, but debit isn't as well optimized for online card not present purchases, which is the majority of these recurring purchases. So, and that's a big fear of card networks. Is that I don't know how many consumers are going to switch from Pix, from a credit card payment to Pix, unless they are incentivized by the merchant, which very well could happen. For example, just myself here in the US, in the last month, I had T-Mobile, my phone carrier, email me and say, hey, to continue to save $10 a month on your auto pay discount, you need to change your credit card to a debit card or bank transfer. And I thought that was quite indicative of the trend that we're in globally. And if merchants start to incentivize that migration, which they very well could, then that would really start to ding credit cards.
Question on that, Lindsay, is it like the interchange? So banks are losing interchange revenue as they switch to Pix, I guess, right? They're losing
They are.
debit and credit. So how are they making that up? Like, or are they, is this like a losing game for them?
It's a great question. And I think it's an unanswered question. Because the mystery is that when Pix was rolled out, banks were very highly in favor of Pix. Either, at least that's how they showed up in the market, a race to capture customers and have them sign up for Pix under sign up for their Jave connected to their bank account. So in one sense, banks didn't want to lose out on this. They knew it was happening. It was mandatory. They sensed it would be a hit and banks didn't want to lose out. So they promoted it. And that in one way really helped promote the adoption of Pix. But now they're losing revenue on their card business. And so I don't know if there's any Brazilians who have any thoughts on this. It's a great question. I haven't really had the chance to really fully answer that. It would appear that in order to participate in this digital game, banks have been very willing to sacrifice that revenue. And in a game of not wanting to lose customers.
I mean, it's kind of interesting because I think we're seeing like one of the reasons why banks in the US aren't really keen to pick up on this is because of that loss in interchange. So like it'll be interesting to follow like how banks in Brazil recoup their finances, because that could be a model for rest of the world.
Well, and the regulators are discussing capping revolving interest rates in Brazil. They have updated caps on prepaid and debit card interchange. There's a lot of, and persecution is a strong word, that's what's coming to my mind at the moment on the card industry, in order to promote easier and more affordable access to financial services. So it's a big ongoing question. Cards have been massively profitable for banks. And so they're now needing to look for other revenue sources. And that's a question to continue looking at for sure.
And for sure, Lindsay, I'm sorry.
Yeah, Ruben, go ahead.
No, I'm not in Brazil, and I don't know so much from Brazil, but what I understand is that from the beginning, the banks were looking with Pix to bankarize more people and start, incentivizing to use it other kind of banking products, for instance, because many people who were not bankarized and were only using cash in the past, now through Pix are able to be segmented, and some of them could be receive an offer for lending products, and it's like a game of making the market bigger for the banks rather than losing some part of the interchange. That what is true. It's a very good comment from Marcia. Yeah.
Absolutely. It's very much a long-term investment thought process, which is kind of rare. And it's a thought process that many banks in other markets have not adopted and are pushing back against, Mexico, for example. That mentality has really not been adopted in Mexico. So, it's quite interesting to see these different models play out.
Are you
So-
also, do you have studies about so the theory there, I guess, is that as more of these customers get banked, then they're going to grow their banking relationship with other products like lending where banks do make money. Is that also an area where you guys track the growth? Like, are you guys looking at those bank products?
We have not done a longitudinal study like that. The theory, and actually the MasterCard report that we put out a couple of weeks ago on financial inclusion shows that journey, right? The ladder of financial inclusion, how you start with P2P or a mobile top up or a bill pay, and then you increasingly become more educated, become more sophisticated, you trust more in the system, and then you move up the ladder. That's the model, and that's the opportunity that many banks and fintechs are following. And when you watch the trajectory of Nubank, for example, or even in Banco Inter or other fintechs, that's exactly, they started just with one simple product, right? Either a credit card or an account or just something simple. And then they increasingly add those more sophisticated services to bring their customers up the ladder and also, seek profitability. So we haven't done that longitudinal, actually study it. Are individuals actually doing this? But that's the theory.
I'm interested in what you were saying about this big push, because I didn't know this was happening, a big push to get away from credit cards. And if you're going to reduce credit cards have a huge cost for the banks because you've got dispute resolution, you've got purchase guarantees. You don't have those on debit cards. You don't have those on PICs. You don't have those on anything else. That benefits the consumer, but everybody else, all the businesses and the government, they have work to do it. If you cut down on the fees that the banks can charge, the interchange rates, the interest rates, then they're not going to want to do it at all. But if there is a big push now to get rid of credit cards for people, do people realize they're going to lose that purchase guarantee, which becomes more important when you're buying online?
All very good questions. And I don't think, credit cards aren't going to disappear. They're not going to, but of course there is this downward trend. And, we get asked all the time, what about fraud? What about chargebacks? What about purchase guarantees? And I think the industry still has not really grappled with these questions. And most interestingly is that when we talk to merchants, big merchants, these questions are not bothering them yet. Have dispute resolution, returns, these things have not become problematic enough. They haven't scaled enough yet to become a pain for these companies. They're very interested in the instant settlement that PIX provides them, and the ability to sell to more consumers who don't have credit cards. So that so far has been more of a hook than the risk side, or the fact that there's this big question mark about returns, about reversals, about chargebacks, about purchase guarantees. So, I think
bigger merchants,
it's still
I'm
a lot
guessing,
of turbulence and unanswered questions there.
I'm guessing that the bigger merchants have built up a reputation already. They're not going to mess with it. So they're probably already doing fairly decently with that. So that's not an issue for them or their customers. It's the smaller ones that are like, okay, you're going online, you find somewhere going, I'm going to buy this. Can I trust them? If I've got a credit card, I don't have to trust them. If I don't have a credit card, then I send them money, I may never see anything again. And that's the reality of it.
It's interesting, though. I do believe, and anyone can chime in with a different opinion, that there is more fear related to a credit purchase than a PIX purchase, because there's a lot of fear around exposing my credit card credentials online. Whereas Pix, you go through your online banking and you're sending the money rather than, exposing your own credentials. So, but there is no discussion there about purchase guarantee. In the consumer mindset, whenever we've looked at fraud or had these types of conversations, that's what the narrative has been.
And it's probably because there hasn't been a huge amount up to this point. As it grows, which it will, then it'll become a bigger and bigger issue, and the fear of one will change to the fear of the other. The transition over time.
Exactly. And we're in the middle of that transition, and I don't think the chips have fallen yet. Right, Oscar, right. The card model protects the customer, the Pix model protects the merchant. That's absolutely right. I don't think that consumers have understood that yet. So that's a really good opportunity for card networks, issuers, acquirers to really get that message out there.
Yeah, they will find out. They're going for convenience right now, and Pix is
Like
wonderful. But they will find out. And a large part, you're going to get people that are buying stuff, as you were saying, like more and more people are buying things online for the first time. And it's convenience and it's wonderful. And they haven't hit that brick wall yet. Or they don't know anyone that has. And the moment that happens, then everything changes. You go, oh my God, either you've been hit by something or a friend or family member has, and you go, hang on a second, there's nothing I can do about this. And then it starts becoming an issue, but it doesn't until, this is consumers. They're learning. This is a new industry in a way for them to be entering.
And the industry is learning. Merchants are learning. It's still brand new. So let's continue. We see this trend, of course. Pix is by far the leader in terms of total volume, but we see this trend spreading across the region in different levels of success. So actually, what's interesting is the Botón PSE in Colombia actually, which is a bank transfer, a button that helps you send money to e-commerce merchants, actually has the highest share, higher penetration than Pix. It's been around longer and has been very successful. So it's 32% share of e-commerce in Colombia, even though it is notorious for being a poor user experience. So, and actually I have kind of several different client requests. Can we look into this? Can we understand why are consumers so interested? Why do they like PSE so much when the user experience is so bad? Even Pix, which is kind of famous for being easy, you have to do this awkward copy paste of a code, redirect to my bank, go into my bank, paste the code, redirect. It's still pretty quick, but there's several steps. So consumers are demonstrating appetite for account-based transfers for multiple reasons, okay? Credit card and non-credit card holders alike. And so we also haven't, we see this starting to take place in Bolivia, which has very low credit card penetration. We see Sinpe in Costa Rica, which has been around the longest, having some decent traction. And SPAY in Mexico is still low in penetration, but anecdotally, we see SPAY being used more and more for purchases. The average ticket of SPAY is going down. Low volume transactions, which are defined as being under $400, that volume is rapidly going up. So SPAY is becoming more known as an actual payment method. Okay, let's go ahead. All right, just pausing to talk about cards a little bit. This is what we see here is the share of cards of e-commerce expenditure. Okay, so even though we have more competition from alternatives, cards are still in the lead, especially in early stage markets. So in markets like Ecuador, Panama, DR, Guatemala, there hasn't been as much development as alternative payment in alternative payment methods. You don't see cash vouchers. You don't see these agile bank transfer schemes available. And so cards are really high in share. And to some extent, the share of cards within e-commerce is a proxy for market maturity, right? The more developed a market is, the more payment alternatives there are, making it more accessible to a wide variety of consumers with different accessibilities and preferences. So we can kind of see there's some correlation. It's not perfect, but we can see some correlation to the e-commerce share of GDP, right? The lower the share of cards, the higher the penetration of e-commerce. Not a perfect correlation, but something interesting to look at. Okay, let's go ahead. Now, the payment method split varies by industry, of course. So we've been looking at all of e-commerce, but when we break this out into certain verticals, you're going to see differences. And digital goods are driving demand for card payments. Okay, digital goods require a digitized consumer. In many cases, that's a higher income consumer who is used to using credit cards. So credit cards, cards in general have a higher share of streaming and gaming when we compare it to total e-commerce. And if we look at retail, which is the most accessible vertical, that's going to have the lowest share of cards actually. So it just, just a reminder to think about verticals when we're really looking at these payment method splits. Okay. Wallets are a really interesting subject. Wallets have proliferated over the past several years across Latin America. But in e-commerce, actually facilitating online purchases, only a handful have achieved scale. Okay, and that's because there's many closed loop wallets out there, but very few of them have actually developed an integration with merchants to establish a wallet to merchant transfer. They usually depend on a debit card that's issued from the wallet or a bank transfer. And so wallets as the actual payment method is kind of limited in e-commerce payment. But we do have PayPal, Mercado Pago, and Apple Pay, which are dominating wallet expenditure. But what's interesting, when we think about wallets, we have to understand the way we categorize wallet spend is that if I select the wallet at checkout as my payment method, my transaction is going to be categorized as a wallet transaction, even if within that wallet, my funding source is a credit card or some other payment method. Okay, so in our estimations, 70% of wallet volume actually represents a card. So this is a caveat, right? This changes a little bit the speech we've been saying about this downward trend in cards. Some of that is flowing to a wallet. And what a wallet does, it provides another form factor for cards, adding some UX, security, loyalty, and adding providing whatever convenience that consumer needs to make them want to use their card. And we think this is going to grow, especially Apple Pay and Google Wallet, other tokenized pass-through wallets that are really just serving as a digital version of your plastic credential. So really important to understand that wallets, especially outside of Latin America, in the US, in Europe, are really representing card volume. So this wallet question is very interesting. Mercado Pago here is the exception. Mercado Pago does enable all different types of payment methods, alternatives, including its own Mercado Pago balance. But still, even within Mercado Pago volume, cards are the leader.
I generally refer to them as card wallets just to distinguish between them, because you're right, they are very different.
Very different. And non-card wallets haven't really penetrated e-commerce. They're penetrating physical commerce more because they're an easy P2P payment, and they're very dominant in social commerce, which we don't capture here in our numbers. So again, there's kind of different use cases for different for these different solutions. Okay. And so here we talk about wallets beyond e-commerce, wallets kind of living at the intersection of rails. And beyond e-commerce, we see a lot more variety, more use cases, more features and functionalities. And so it's just important to really define, when we're using the term wallet, really define what we're talking about. We've got, you can see millions of users, some huge success stories here in terms of users. Especially at attracting sort of the middle towards the bottom of the pyramid, consumers who are getting digitized for the first time and are getting hooked by something not related to purchasing, like a remittance, loyalty, credit, in a big way, these hooks are important for attracting consumers who are digitizing for the first time.
I've got a question that might go back to e-commerce, but for example, I've learned about Nubank in Brazil, and they've launched a digital wallet referring to as NuPay that they could use, you know, for online purchases. I think they're already integrated with iFood and a few other e-commerce stores. And I'm just curious how you think if you have a consumer that's a customer of Nubank and uses NuPay, will that be a more attractive offer for those customers than one of these more generic digital wallets? Like, will they be incentivized by Nubank, who is their bank, to extend other offers where they might want to use their NuPay over their Mercado Pago or other digital wallet?
Sullivan, do you have any thoughts on that question?
Yes. So basically, NuPay, it is not a digital wallet. It is the payment initiation service from Nubank that they developed, and they branded as a product, which is not exactly a wallet. It is just a payment initiation service, which was enabled by Open Finance in Brazil. So right now, if I enter a merchant that offers NuPay, and I click NuPay as a payment method, I receive a notification, and I am automatically redirect to my bank account, and I just approve the payment. So it is the payment initiation flow branded as a wallet, and I think that they made a really good job launching this product, because it was the first bank to position the payment initiation services as a different product. But yes, I think that the flow is better, and the merchants will try to offer this type of payment method, which it needs to be a direct integration with Nubank to offer this type of payment method.
Okay, well, it fooled me. I thought it was digital wallets. They did do a good job.
Yeah.
All right, thank you.
Once again,
Sure.
Nubank just wins in marketing.
Yes.
Okay, so we're running out of time here. I love you guys. This is a very robust deck. We have a lot of content. Just really quickly show you guys what else is in here. We deep dive into kind of wallet marketplaces and platforms. And then we go into the cross-border analysis, which I'm just going to touch on super quickly just on this slide, which shows us that we see this green line as cross-border as the share of overall payment of overall e-commerce. And we see it continuing to grow faster than domestic. It's still a relatively small slice of the market, representing today around $70 billion, but growing a little bit faster. You know, we're in an increasingly globalized and digitized world. And so global companies are looking for new opportunities all over the globe, going to the ends of the earth to find their new growth opportunity, including to Ecuador or El Salvador, right? So we're starting to see this become more deeply penetrated. If we go to the next slide, what I think is interesting is just cross-border e-commerce enablement is becoming more competitive, more and more fragmented. You've got over a dozen, almost 20 companies. I'm sure I'm missing some in Latin America alone, trying to enable local payments for enterprise level global merchants trying to operate in Latin America. So all chasing this $70 billion market. So we do a lot of work with these guys. You guys have seen our reports that we've put out in participation with eBanks, with dLocal, with others, PagSeguro. And so this is a segment that we look at quite closely. Okay. So we've run out of time. What I want you guys to do is access this report. It will be uploaded into the portal, so you guys have access to it. You'll also see this. We're going to be sending out e-blast to our whole network announcing this report. There is also a paid version. Andreas, if you want to just jump to the last last slide here. Yeah, you guys have all this nice data. So just a final announcement here. So this report is already very robust. You guys have seen a lot of data, a lot of insights, mostly at the regional level. However, if you need more country level data or you want to go deeper, you need something customized, we have a lot of options for you. Okay, one is just a very detailed e-commerce data set. If you only need the numbers, we have all of this data per country from 2018 forecasted to 2026 on a per country basis that is available, as well as bundles of countries, just depending on what you're needing. We can customize that data. All of that is available to you. And then we're also, it's not ready yet, but we're coming out with a paid version of this report, which will have more country level data, payment methods split by country, pretty much all the data that you saw, almost all of it on a country level. So you get a really rich data report as well as the trends overall. So get in touch with Andreas as our primary contact for that if you are interested in learning more. We want to be your #1 resource for you guys in understanding digital payments in the region. And again, we're going to be expanding into other markets soon. So watch your email for that. This report will be available to you in the portal. It'll also be sent out via email in the next couple of weeks. Get in touch with us if you have questions. So thank you guys for your time and your questions. Love the discussion today. And next time in 2 weeks, please join us. We're really excited for a discussion on FedNow. We're departing a little bit from Latin America. We're looking at FedNow, which I know is top of mind for a lot of you. We're gonna have Marcia joining us, which I'm really excited to have as a guest. And so we'll see you guys in 2 weeks. Thank you so much and have a great week ahead. We'll see you soon.